All right, today we're talking about ArcBest. Now, think about this. A logistics company that's been around for a full century. It's a story of survival, of reinvention, and a really big bet on the future of shipping. But here's the thing. In a world of AI, drones, and insane competition, is being 100 years old a superpower, or is it just old baggage? That's what we're here to figure out.
Yeah, it's a really interesting question, right? I mean, can a company that literally started out with trucks from the Model T era actually compete today? To get to the bottom of that, we've got to look at where they came from, what they're doing now, and figure out if their stock, RACB, is something you'd actually want in your portfolio.
Okay, so first things first, let's talk about where ArcBest even came from. Because, 100 years, that's not just a long time, it's a story of survival. And that story really shaped the DNA of the company we see today. So their journey really boils down to a few key moments. For decades, it was just steady growth. But then, check this out, 1988. The company almost gets taken over, but the employees step up and buy it themselves. I mean, talk about building a strong culture. Then you fast forward to 2010. New CEO Judy McReynolds comes in, and everything starts to shift. The big signal was in 2014 when they rebranded to ArcBest. And let me tell you, that was way more than just a new logo. It was them telling the world they were heading in a completely new direction. And that's what this next part is all about. That modern pivot. ArcBest looked around and realized, hey, to make it another 100 years, we can't just be a trucking company anymore. So what does that actually mean, more than a trucking company? Well, back in the day, they were what you'd call a classic trucker. They owned all their trucks, that's the asset-based part, and they did a lot of LTL, or less than truckload shipping. Shipping a few pallets at a time, not a whole truck's worth of stuff. But now, they're a totally integrated logistics provider. They still have their own trucks, sure, but they've added this whole asset-light side to the business. Think of it like a tech platform. They connect people who need to ship stuff with a huge network of other carriers. And they built this by making some really smart buys, like picking up Panther back in 2012 and then Molo in 2021. Those were the real game changers. Okay, so they have this new integrated model. How does it actually make them money? Well, it really boils down to two main parts of the business. Two streams of revenue that are connected, but also pretty different. And you can see the results of that pivot right here. Their traditional trucking business, ABF Freight, still makes up the majority of the money, about 65%. But look at this other slice. Their new tech-focused logistics services are already at 35%. And that's not just a big number. It's the fastest growing part of the company. It's really the engine for their whole modern strategy. But wait a minute. How do you convince a customer who's only ever used your trucks to start buying all this newfangled tech and brokerage stuff? The answer, my friends, is something incredibly powerful. A super sticky customer base. Okay, this number you're looking at right now, it might be the single most important one for understanding if their strategy is actually working. 105%. That's their net dollar retention. So what the heck does that mean? It means their top customers from last year didn't just stick around. They actually spent 5% more this year. They're not just staying, they're buying more and more. This is the proof. It shows that their big bet is paying off. They are absolutely succeeding at selling these new services to their old-school loyal customers. And they are not stopping there. ArcBest is taking that success and doubling down, pouring money into technology. They're betting that innovation is what's going to win the logistics game for the next decade. And we're not just talking about software here. We're talking robotics. We're talking remote-controlled equipment. The cool stuff. And these tech bets are no joke. They've got this thing called Vox. It's a robotic system that helps load and unload freight. Then there's Phantom, which lets people operate stuff like forklifts remotely. And this isn't some science fair project. Their Vox system was named one of Time Magazine's best inventions of 2023. That's a huge deal. These are real tools being built right now to give them a serious edge for years to come. All right, so we've covered their 100-year history of survival, we've looked at their huge strategic pivot, and we've seen their big bets on future tech. So now, the big question, should you invest in ArcBest? Let's put it all together and look at the arguments for and against, the bull versus the bear case. So here's how the debate shakes out. On the invest side, the bull case, you got a business that's proven it's resilient, it's diversified, it has that crazy strong customer loyalty, and hey, the stock is trading at a pretty attractive price. But the bears have some good points too. This industry is super sensitive to the economy. If things slow down, they feel it. Competition is absolutely brutal. And having a unionized workforce, while great for workers, means their costs are less flexible, which can be a real problem when business is slow.
So when you put it all together, what's the verdict? This quote from a recent deep dive report really sums it up. They call ArcBest moderately investable, and it's especially for value investors. People who are looking for a solid company that's not overpriced. It's basically a bet that the whole shipping and logistics world is going to bounce back. Which brings us to the final, critical question. You can think of ArcBest as being in a race. In one lane, you have all this incredible innovation, robotics, AI, this new business model. But in the lane right next to it is the big, unavoidable economic cycle. So the whole investment case really comes down to this. Can their innovation engine move fast enough to outrun the next economic downturn? And that is the question every investor has to answer for themselves.